You know, we're talking about QE here, quantitative easing. It's a done deal. Is that true? And if so, how much are we going to get in the system?
I think right now the big question is how much of it is priced in, and if it's priced in, is it going to be successful? I think these are the issues that I think starting to become very important for investors. Our view is that it's priced in, or at least 90% of it is priced in. If you look at the real yields on 10-year U.S. inflation index securities, these things are now trading at 0.4%, which is lower than any time in the history of TIPS. In fact, lower than during QE1, or for that matter, during the periods during which people were talking about, global saving glut. So I would say largely priced in. Now the bigger question is what is going to be successful. Our view is that probably it's not going to be quite as successful as QE1 in terms of what it means for reinflating the economy. So from that point of view, we don't think this is going to be necessarily negative or very negative for the dollar going forward.
Yeah, China's certainly against it as well, suggesting it could be inflationary for them.
Yeah, I think the China issue is a much more interesting one because quite clearly, with the U.S. doing QE and China hiking rates, you couldn't get more opposing policy action at this point. I think, our interpretation of the Chinese decision to hike rates is that, they've been trying to cool the housing market for the last 6 months. That so far hasn't worked. And then they have to now resort to a blunter instrument by raising rates to basically fight that. And I think, from that point of view, I think with the latest rate hike from China, this also makes the G20 meeting much less relevant to the extent that I think it's much less likely China is going to be hiking rates and allowing the renminbi to revalue at the same time. And I think this is going to be very, very interesting.
David, with that in mind, we did get that rate hike. We've also got this slew of data coming through this morning out of China. That rate hike, though, is it an admission by the Chinese authorities that their attempts to cool some of those asset prices, chiefly property, has failed?
Yeah, I think so. I think in many ways that's one way to look at it. And it's also telling you that, think about it this way. A week ago, everybody's talking about currency wars. That was very much on the mind of everybody. I think, quite clearly now the Chinese telling you that, to essentially avoiding the housing bubble getting bigger is becoming an even bigger priority. So from that point of view, I think their domestic policy objective is going to start to override their foreign currency priorities. And I think that's a major clash of interest between the U.S. and China. Because we have to understand, in the last 10 years, if you think about this, U.S. as an issuer of reserve currency can always dictate, the monetary policy of other countries. When the Fed cuts rates, they force the dollar lower, then therefore other countries would then have to adopt easier monetary policy to prevent their currencies from appreciating against the dollar. But now, the China sending you a totally different signal, and Brazil, by imposing essentially a big tax on capital inflows, are basically telling you that they also want to try to insulate themselves from QE2. Well, rather for that matter, they have much more limited room to allow their currency to appreciate further. And that's a source of major conflict and source of volatility for the market.
Very quickly, David, we are heading towards that G20 meeting very quickly now. From what you're saying, Brazil's not even going to it. Does it really mean that we're not going to get any sort of coordination as everybody pursues their own agenda?
I think that's very likely, and that's certainly my take on this whole situation after what's been going on in the last few days. Because I think, in 2008, 2009, when we were in a global crisis, countries were working very closely together to coordinate their policy in order to respond to a global crisis. Now, quite clearly, the circumstances different countries vary country from country. And I think what you're going to see is that, you're going to start to see, I must say, opposing, trends going forward, but certainly, much more divergent policies going forward.
David, thanks so much for joining us. Great to see you again. David Wu there joining us from New York.